Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. US President Donald Trump hints that National Economic Council Director Kevin Hassett could be his pick for next Fed chair, but says an announcement won't come until New Year. The Kremlin describes talks with the US over Ukraine as very useful, but there's no deal yet on an end to the war. NATO foreign ministers gather today in Brussels. And the EU reaches a deal to phase out Russian gas imports faster than originally planned in an effort to finally sever the bloc's remaining energy ties with Moscow. We will discuss with Fatih Birol, IEA Executive Director.
Anna, Bitcoin is up. Stocks really aren't that much. We saw a decent bounce yesterday for the semi-stocks. You've seen that continuing overnight through in Asia. Nasdaq futures, though, are only up by 0.2%. Eurostoxx 50 futures are up by 0.3%. Bitcoin is bouncing. It's a decent bounce. As you can see, we're now trading at 93.44. But you basically need to widen the lens a little bit and take a look at the 1 month chart rather than the 3-day chart. And the picture looks significantly less impressive. But we are up. And the relationship between these two, how strong is it? I don't know. The market's going to kind of play that one out, I suspect, over the next few days. Lots of data today, lots to think about, lots of corporates to focus on. The countdown to the opening trade starts right now.
I guess a potential Fed chair is here too. I don't know. Are we allowed to say that? Potential. He's a respected person, that I can tell you. Thank you, Kevin.
We need to talk about Kevin. Kevin Hassett looks like he's going to be the next Fed chair. Do I stop listening to Powell? Is Hassett the new voice I need to be listening to and paying attention to? Yeah, we may not get an announcement until the beginning of next year, but it feels like it's Hassett.
It does feel that way, doesn't it? And that seems to be the mood that was being created in that room, for sure. I mean, what does this mean in terms of the voting pattern? It certainly means that people have been already assuming a more dovish pattern for the Fed next year. But it is only one voice in a committee. Of course, it's the chair. It's very important. But we speak to Robert Dishner a little bit later on this hour. Interesting to get his perspective from the fixed income markets as to what this means for those in fixed income. I mean, is it already in the price as well? Because we've been talking about him being the front runner in pole position for some time.
The expectation has been that there will be, significant cuts under a Hassett chair. But as you say, there is a committee issue that you need to factor into your thinking. There's also the kind of the Fed governors and the kind of how that process, the Fed presidents and how that process unfolds. So all of that needs to be kind of brought into the mix as well. We still don't know what's happening with Lisa Cook. That's a factor which you need to think about as well. So there's all kinds of other kind of things going on around this story. But the tone will be, and if you think about the politics, the tone will be rates need to come down. And Trump clearly needs lower auto loan costs, I think, probably going into the midterms next year. There's a labour market factor. You can't see the labour market rolling over going into those midterms as well. So this is why he needs this to happen. I think if you look at it through a political lens, there is a clear necessity for lower rates in the United States. What that means to the mortgage market, I'm a little less clear on.
Yeah, and JP Morgan saying that we're all expecting too many cuts, that we won't actually get as many cuts as we're suggesting, because all of that relies maybe also on some weakness in the US economy. And sure, we talk a lot about that, but is the US economy really going to roll over? JP Morgan saying it's going to bend but not break, and therefore we won't see the level of rate cuts that the market is currently pricing in. But that could make for some fiery discussions at the FOMC.
How does Trump help the lower economic cohorts there?
Yes,
that is the question.
The K-shape of the US economy, as we talk about often. Let's talk about tech, because we threw this around a little bit this morning, didn't we? Confused as to what the top line is on tech. I think I found an interesting note out from Wells Fargo. They're talking about how anything tied to ChatGPT and GPUs has been underperforming recently. Anything tied to Gemini and TPUs has been outperforming. And so this is just really throwing into stark contrast. And Amazon was an example of this news flow yesterday. OpenAI, an example of this news flow yesterday, even the Oracle story perhaps, of how maybe the front runners and the people that everybody thought were making the running, the first mover advantage, maybe that isn't where we are right now, and things becoming more nuanced, more idiosyncratic around the tech theme.
What's the difference between a TPU and a GPU? We need to get into the nuance of understanding what is going to happen here. Is the era of NVIDIA and its dominance over, or does the software protect the moat that NVIDIA has built for itself? Because the software is better, it's not just about chips. How quickly can Google catch up? What does this hours and chip actually do? To your point about what happens with the nuance, am I being much more sort of clear in terms of what I need to use this chip for and this chip for?
Yes.
Can I reduce costs if I use maybe cheaper chip? There's so many questions now, and I don't understand. And I think it's becoming harder to... Is it becoming easier or harder for the market to price the AI trade?
And then does it become the temptation of any business in this space to try and spend too much to fend off the competition? And that's where we get to Oracle, because there is some concern about the amount of debt that they have taken on, and that is pushing up the cost of insuring against default over at Oracle. So CDS is going higher. And that just emblematic, perhaps, of the nervousness in the markets about excitement around AI, but nervousness about where this money is being spent and whether insurance is required.
They report next week. It's going to be a busy week next week. OK, let's talk about what is happening with the... I'm going to start calling this the energy story, because that increasingly feels like how Europe is viewing it. What is happening with the Ukraine story is front and centre for Europe and what happens next. Foreign ministers arriving at the NATO headquarters to discuss the alliance's support for Ukraine. Let's get a take on what we can expect today. Our chief Europe correspondent, Oliver Crook, joins us from there. What does this meeting deliver, Oliver?
Yeah, so, Guy, I've been speaking to a few foreign ministers as they've been filing in here. We're still awaiting the Secretary General, Mark Rutte, expected to arrive any moment. And really the sort of main topic of conversation here is obviously the Ukraine peace proposal. Because remember, when that 28-point plan came out and shocked the world, there were a lot of provisions in there that were not just sort of relegated to Ukraine and to Russia. There were also a lot of sort of rules and specifications that would affect NATO. There was, for example, one of the points that suggested that no additional member could ever join NATO, i.e. not just Ukraine, any other. That, of course, has made a lot of the NATO members bristle. Everyone I've spoken to so far, including the Canadian foreign minister yesterday, saying that these are decisions that will need to be made up to NATO. The difficulty that they have is, of course, the thing we've been talking about for the last few months and really the last few years, is getting a seat at the table. This is a sort of peace process that's been launched by the United States that the Europeans and NATO need to get behind, but they don't really know what's inside of it. I spoke to one minister just walking in now. They have not been briefed on what is included in the 19-point plan at this stage. And add to that, Guy, we have a conspicuous absent here. Marco Rubio, the U.S. Secretary of State, is skipping this meeting. This is something that does not happen very frequently. So as far as the Europeans and NATO are concerned, they can try to align their sort of positions, say what they're willing to do, and help, again, to support Ukraine, but they are emphatically not part of this peace process at this point in time.
Yeah, a no-show by the US. That is quite a big deal for a NATO gathering. Thank you very much, Ollie. Bloomberg's chief Europe correspondent, Oliver Crook. More from Ollie as we go through the programme, of course. And linked to this, of course, is the energy story, as you say, Guy. We're watching European energy prices this morning because we've seen Europe decide, the various parts of the European machinery deciding that they're able to phase out imports of Russian gas more quickly than had been expected. So this is end of 26 or end of 27, depending if you're talking about seaborne or pipeline gas now. And this has been under pressure from the United States on two fronts, partly to buy more US LNG, but partly because it adds credibility, I suppose, to Europe's arguments that the US needs to be tougher on Russia. But interestingly, we are seeing a very small movement in gas prices, but that perhaps speaks to the fact that we have reduced by half the amount of imports from gas from Russia into Europe.
It's getting warmer. Weather is a big factor over the next few weeks.
But the gas price has been down for 8 days on the back of this Ukraine story.
We have a weather forecast, and it's pointing to warmer weather. So there is a demand story element to all of this as well in terms of what is happening with the TTF contract, which is quite significant, and the way that is traded. Obviously, the weather inputs have a big factor. But there's this other story as well. Back to the first story, which is but another angle on it. There's a note out from Mizuho this morning. I can read the energy the note they put out every morning. The end of sanctions is going to see Russian energy products flowing back into Europe. Europe has super high energy costs at the moment relative to the rest of the world. You can see it in Germany, you can see it across Europe. If Russian gas was available again at a cheap price, it would find its way back into Europe in a meaningful way, seems to be.
Yeah, I mean, that's a political choice, though, isn't it?
Not really. To a certain extent, yes. But
that's what the choice last night is all about.
Yes. But you wait and see what happens when a very cheap source of energy becomes available on your doorstep, and see what happens in terms of how gas flows through Europe. It's taken this long to halt it.
Yes.
We've been in this war for years, and we're still having this conversation about halting and not paying the Russians.
Yes.
You think if there was cheap Russian gas available, that Europe wouldn't somehow find a way of
many people asked
integrating
whether there was cheap Russian gas available in 2022, and that didn't, and Europe still made that really, really tough decision. So it's not as if Europe has been afraid to make those really difficult decisions about Russian supply. You look sceptical. We will see.
We're still sending huge amounts of money to Russia to buy their energy, and we have been for years.
A lot less, though.
OK, a lot less, but still significant amounts of money.
Yeah.
And Europe has an energy problem.
We'll see what the peace deal looks like, maybe. Maybe that's what this will rely on.
So if there was a peace deal that lifted sanctions on Russia, driven by America, would Europe say, you know what, we're not going to buy that cheap energy?
Yes, I think, we'll see what the peace deal looks like. Depends how durable and non-threatening that peace deal might look.
Let's ask that question to one of our guests a little bit later on. Fatih Birol, Executive Director for the IEA, is going to be joining us a little bit later on. That conversation happening at 8:45 a.m. London time. What else we got coming up on the show? Robert Dishon is going to be joining us, Senior Portfolio Manager and Head of Trading for London at Neuberger Berman. He'll be on set very, very shortly. Oliver Dorre, the CEO of Hensoldt, the German armaments giants, joining us shortly as well to give us a take on what exactly is happening, A, with the German defence budget, and B, what he sees in terms of this Ukrainian situation and how it's going to develop. Jeff Hughes is going to be joining us from BNY at the Market Open, and Eric Fernandez, the chief economist at CaixaBank, is going to be joining us a little bit later on to give us a take. Big day for data. Lots of data coming out of the United States as well today.
Yes, absolutely. So let's get to that, because we have meetings taking place, but we also have some data. So as we've been saying, NATO foreign ministers are meeting in Brussels, but we do have data from Europe, Euro area composite PMI. But later we get the ADP employment data out of the United States, and it's a big week for data, Guy. And it means we're going to be lifting a little bit of that fog that we've had around the data in the United States. And interesting to see how that interacts with all the Fed commentary.
ISM data coming out, prices paid is going to be fascinating within that, what's happening with the labour market. All of that is going to be something you're going to watch a little bit later on. What else do you need to know this, Wednesday morning? Canada has reached a deal to become the first country outside of the EU to join the bloc's €150 billion military procurement fund. The country's defence minister said the agreement allows Canada to participate by supplying capabilities such as drones, artillery systems and beyond. Canada will initially pay $10 million to join, with the figure to be reassessed based on the amount of contracts that the Canadian industry will get from its participation. That number interesting in the light of what the UK is talking about. HSBC has appointed Brendan Nelson as its next chair, replacing financier Mark Tucker, who has led Europe's largest lender for much of the last decade. 76-year-old Nelson has been serving as interim group chair since early October after joining the board in September 2023. He takes the reins as CEO Georges Elhedi pushes through a massive overhaul of HSBC that has seen the bank reorganised into 4 new divisions. How long will he be in this position for? It has been amazing to watch such a big bank struggle to find a new chair. Zara owner Inditex's sales accelerated in November, highlighting its resilience in the face of weakening consumer sentiments that's hitting most fashion retailers. The gain offers some relief following a lacklustre spell and may ease concerns that the Spanish retailer losing steam. A little bit of steam, maybe.
Let's go to Brussels. The NATO Secretary-General, Mark Rutte, is speaking to journalists. Let's listen in.
One at a time, yes.
Yesterday, Putin was threatening Europe with war again. So what would be your message for him today after these strikes?
I'm not going to react to everything Putin is saying. We have seen him in military clothes, dressed like a soldier at the front, but not at the front. It was quite far from the front the day before yesterday. So no, I'm not going to react to everything.
What do you see new pledges by Norway, the Netherlands?
Yes, so that's really great news. So a lot of pledges have come in, and I hope I can make a few announcements later today. Pledges made today. And when you look at the overall numbers, as I said yesterday, we are now at 4 billion. So that means we are really on track for the 1 billion a month, August, September, October, November. And I'm cautiously optimistic that we will reach the 5 billion for the full year. And then for next year, we need for the full year, again, a lot of money, at least 1 billion, maybe even a little bit more than 1 billion a month. It might be around 50, maybe a little bit more for the whole year. When it comes to this crucial US gear, so this is offensive and defensive, including interceptors for the air defense systems, crucial to keep Ukrainian civilians and civilian infrastructure safe. So it is really good that this flow is there, that Europeans are stepping up, and Canada, by the way, also doing a lot here. So really, really glad that this is working.
But
Sure.
Mark Rutte, the NATO Secretary General,
as you know,
speaking ahead of the meeting that is taking place. We will bring you updates to work our way through the show. Oliver Crook is on the ground for us and will keep us updated. This is Bloomberg. Welcome back. Wednesday morning, 42 minutes to the market open. This is what the picture looks like. Keep an eye on the CAC Current this morning. There's some interesting trades around what is happening there. Airbus is going to be the one that really stands out. The aviation giant out with numbers this morning after it was revealed that it had problems with some of the panels near the doors of its A320s. That is causing, obviously, significant consternation. What we've seen this morning, though, is Airbus finally trying to kind of get in front of this story, or at least catch up with this story. What they've done is lowered guidance in terms of deliveries for the full year. Remember, Airbus gets paid when it delivers planes, and also kept its financial guidance, which is interesting. So clearly there is a focus on what Airbus is going to be doing to fix this problem, and that may take away from some of its rush to get the final planes out of the door. And that, in theory, would have an effect in terms of the numbers. But they're saying, actually, that probably the numbers aren't going to change a great deal as a result of that. Is that enough to calm the market? We are going to wait and watch. Let's turn our attention to what is happening with one of the big picture stories, and that is what is happening at the Federal Reserve. President Trump says he plans to announce his selection for the Federal Reserve early in 2026. Kind of felt like he did it yesterday. But anyway, Trump, who has teased National Economic Counsel Kevin Hassett as his possible choice, revealed his plans for a New Year announcement during a cabinet meeting.
They're going to be coming down. We'll be announcing somebody probably early next year for the new chairman of the Fed.
There was also the story yesterday, the pronouncement yesterday, that that person could be in the room, and by happenstance, I don't know how it happened, Kevin Hassett just was there. And maybe it looks like it's going to be him. Valerie Totel is all over this. Val.
Yeah, maybe it was the clearest signal yet from the president that he has made his mind up that Kevin Hassett is due to be announced as Fed chair at some point next year. Now, the market has been coalescing around this idea. We are pricing around an 80% odds that Kevin Hassett is the man to overtake Jerome Powell's seat. He has been a key player in Trump's economic agenda, and in some ways is quite a standard pick for Fed chair. He's an economist by trade. He actually served as the chair of the Council Economic Advisor under Trump's first term. That chair post was also held by 4 previous Fed chairs, including Bernanke, Janet Yellen, and Alan Greenspan. So economist by trade, but he is known to make some pretty bold calls. His bold call this year is that Trump's policies net are disinflationary, and he thinks that rates should be lower. The key question for markets is whether he can convince the rest of the FOMC Council that that is the direction that rates should be headed. So while 2-year yields didn't necessarily move on this announcement yesterday, I do want to mention something in the long end that's interesting. We've got a BlackRock investor letter for 2026. They're going underweight the long end, Anna, actually because they think that this AI spending spree is going to pressure term premium in the long end. So keep an eye with that. We have this Treasury trade, really now more connected to the AI theme. And while we're talking about what's connected to AI, the big question is Bitcoin still connected to what's going on in the NASDAQ? We have seen Bitcoin really climb back from Monday's slide, now up over 7.5% now in the last 2 sessions. This comeback for Bitcoin continues. Anna?
Okay, Val, thank you very much. Bloomberg's Valerie Totel. Let's get to Robert Dishner, Senior Portfolio Manager and Head of Trading for London at Neuberger Berman. And it is very nice to have you with us this morning. I want to ask you a controversial question, Robert, which is how much does it matter who leads the Fed? And I say that with the hugest respect to anyone who's ever done it and will do it in the future. But one person on a committee, but a very influential voice.
Right. No, it does matter who leads the Fed, right? They're going to set the tone. It's who the market cues on the most in terms of speeches. They may speak the least or medium amount in terms of the overall speakers, but that weight carries a lot for the markets. And they guide the markets in terms of what's being priced for the next meeting or those type of things. So it will, Kevin Hassett, if he is the candidate or he is the next chair, will matter for markets.
How do you think he will change the Fed? How do you think he'll change the research that the Fed does? How often Fed speakers speak? Are we going to see a different Fed under Hassett?
Likely. Unlikely. I mean, the Fed is a sobering place, right? You say a lot of things when you're outside the Fed, and then when you're inside the Fed, there's a lot of respect for the institution, the researchers,
That's
those
not what
type of
Trump
things.
wants. Trump wants him to go in there and shake things up. Trump wants him to go in there and cut rates and change the narrative at the Fed. And we're talking about fiscal dominance, and that's kind of what Trump wants. Isn't that why he's being put in the job?
Well, he's being put in the job because, one, he's a smart, he's a smart guy, right?
Sure.
He's a PhD from Wharton, I believe. But the idea that he's just going to be in there and just cut rates willy-nilly, emerging market style, these type of things is probably a bit unlikely. But he is going to advance in a very academic or intellectual way, what makes sense in terms of the rate policy for the Fed.
Robert, are you thinking about AI and what that does to the US economy in the very short term, medium term, long term? Val was talking about a call on long-term rates as a result of AI and the spending boom that we were hearing from one house. Yesterday, a couple of days ago, in fact, we talked to somebody who was saying that actually it's going to be deflationary in the very short term in the United States because of job losses. I mean, what's your thinking about the role of AI here in inflation?
Right, exactly. So one of the bigger concerns we have is on that employment report, right? What was it, MIT? Or someone was out the other day saying AI today could replace 17% of jobs. And we're seeing that graduate unemployment, these type of things in the U.S. or that youth unemployment in the U.S. And in that near term, right, it's the low-hanging fruit for AI, right? So is this a bit more of a pressure on labor markets in order to, potentially drive down inflation a little bit?
So what happens next? What happens to the U.S. curve? Front end comes down. What happens to the long end?
Well, it's a great question. We think 2026 is going to be less about curve, right? 2025 was an easy trade. You're in the steepener most of the year. It worked. You got paid.
Yep.
2026 is really going to be about rates up and down. 10s up 30, down 30. 30s up 30, down 30. Twos.
Why?
Just because the outlook on the economy is a bit wider in terms of your question about AI, right? The distribution of outcomes is wider. And you just can't say there's going to be a lot of term premium, right? One of the other issues that we talk about inflation, labor, but also supply. Do central governments restrict supply in the long end? So if there's no supply in the long end, what do pension funds do in terms of their funded status? Are they just going to keep buying the long end? So it's probably a little bit less about curve next year and more about just, old-fashioned up-down trading.
Yeah, we have a story out this morning talking about the UK and Japan kind of being out there doing exactly that, cutting long end supply, but suggesting that maybe this is because people think we're going to sort of revert to some sort of mean, revert to where we were, lower rates post GFC at some point, and that's why they'll wait until the rates come down. But maybe that's not the case.
Yeah, I mean, part of it too is that governments are finding they don't want to validate these longer term prices.
Yeah.
Now, longer term, that's a bit of an issue as you shorten your debt stack, right? Then you face potential refinancing risk. But, this is the U.S., this is the U.K., this is Japan. This isn't necessarily, a troubled, these are not troubled countries.
Is that a good thing?
It's not ideal, but it's not the worst thing in the world either.
Is the bond market going to be a place to hide next year?
So that's a great question. We've been fielding this, right? Like, people are afraid of credit spreads. But remember, credit is a risk-off trade for equity investors. Right, and so we think, and we're seeing demand for fixed income products into 2026 because people are looking at their asset allocations and they're worried about equity valuations. Fixed income isn't that nice alternative, especially given where yields are.
Robert, thank you very much. Thanks for joining us. Good to get your perspective. Robert Dishner, Senior Portfolio Manager and Head of Trading for London at Neuberger Berman. Coming up on the programme, an exclusive conversation with the Hensoldt CEO as NATO defence ministers gather in Brussels to discuss support for Ukraine. And Guy, we talked many times on this programme about what would happen if we do see a peace deal agreed around Ukraine.
Yep.
What would happen on a number of fronts. Clearly, life would change immeasurably in Ukraine itself. But from a market's perspective, what would happen? What would it mean for the European defence push? The spending that we're seeing on defence, that's a big question.
What's happening with the German government is also a significant factor as well. How stable is this German government? Is this plan to spend significant amounts of money on German defence going to be there? You look at what is coming out of NATO today. I think that's an interesting sideline on that as well. Anyway, we're going to get all that covered in just a moment and figure it all out. Hensoldt CEO joining us in just a moment. This is what European equities look like heading into the open. Bonds not moving that much this morning. They're just starting to open. This is Bloomberg. Welcome back. 30 minutes to go until the start of equity trading here in Europe. I would say we've got a reasonably kind of cautious start. As you can see, Stock's 50 up a little bit more, actually, which is interesting than the FTSE 100 and the CAC. So maybe we're looking at the wrong numbers there. Germany may be a factor in all of this. But keep an eye on some of the single stocks. There are plenty of names out there this morning that are worth focusing on. You've got Inditex out with numbers. You've got a capital markets day over at Glencore, an investor day at Glencore. You've got Airbus out with new guidance. There's a lot going on at the single stock level, if not at the index level, Anna.
Yes, Spanish futures do seem to be strong.
Is that the standout? Yeah.
Inditex then springs to mind there. Let's have a look at what we are seeing on the bond markets. Not a huge amount of movement right now. We started off this week with some substantial moves higher in yields, but things have calmed down a little since then. Our attention turns then to geopolitics and to the defence narrative. Let's return to the meeting, which is underway between NATO foreign ministers. They've been gathering to discuss the alliance's support for Ukraine. It follows talks between the Russian President Vladimir Putin and US envoy Steve Witkoff and Jared Kushner in Moscow, which failed to reach agreement on a plan to end the conflict, although there were some positive words from both sides about continuing to talk. In the last few minutes, Lithuania's foreign minister said economic pressure must be applied to Russia to force a deal.
Time is ticking away, and this is obvious. We have now only 2 weeks to make a decision till European Council, and I'm really optimistic that we will make it. Otherwise, I will be really big pessimist because we do not have the alternatives for finances for Ukraine. And this solution that was provided as the concept from European Commission is a good one. Now we are waiting for the legal proposal, and it should be coming out in these days, in upcoming days. And I have the hope that it will push forward the process.
Let's bring in Bloomberg's chief Europe correspondent, Oliver Crick, who we spoke to briefly at the top of the hour, but let's get a longer briefing from him. Ollie, good morning again. So where do things stand then with the peace plan for Ukraine?
Yeah, so we got very little information that's been trickling out. Really, it was only the Russian side that briefed. You summarized some of those headlines there at the beginning there, Anna. But really, I think the takeaway was that there's a lot of work left to be done, both in Washington and in Moscow. Those are the words from the Kremlin foreign aide, Yuri Yushakov, speaking after those meetings that lasted about 5 hours between Steve Witkoff, Vladimir Putin, Jared Kushner, the president's son-in-law, also in attendance. And of course, now the focus for the Europeans who are here and gathering at NATO, in the absence, we should say, of Marco Rubio. We just saw his deputy walk in, greeted by the U.S. ambassador to NATO. As Mark Rutte was briefing, we saw the Americans sort of slink in the background. Obviously, everyone has about 1 million questions for them in terms of what comes next. But for the Europeans, many of them have not been briefed on what is in this 19-point proposal. Really, when we first got that 28-point plan, there was a lot of information in that about NATO, about the European security architecture. Ever since that, those conversations have really gone underground. And we should say that also the cadence of what is expected in terms of potentially getting a breakthrough peace proposal, I think, has also slowed down. The Trump administration really presented this plan about a week and a half ago at warp speed. I think we are now closer to more traditional diplomatic speed, just hearing from everything that we've heard from the Russians so far, trying to tamp down expectations from those meetings. That being said, we haven't been fully briefed by the United States, and we'll expect to hear from them over the next couple of hours in terms of what the next steps are. Remember, this is a sort of conversation that began in Geneva, then to Florida, then to Moscow. The question is, where will the next conversation be?
Ollie, what's the objective of this meeting, though?
Well, I think the objective here is to try to, again, get aligned in terms of what the NATO position is going to be, in terms of what they're sort of willing to do, what they're willing to give. I think, that, again, the big sort of issue for many of the European leaders, many of the members of NATO, is that their sort of position is being used as a bargaining chip by the United States, at least according to that initial 28-point plan, not necessarily with their input. And even at this stage, I'm sure there are some informal briefings going on. I know from the Canadian foreign minister whom I spoke to yesterday, she's in pretty close contact with Marco Rubio consistently, but there's not an official channel, it seems, of briefings and consultations with NATO allies and Europeans in terms of what and in terms of their input into this peace process. So again, it's going to have to be what ways can they continue to support Ukraine. We just heard in the introduction there from the Lithuanian foreign minister, he was referring to the Europeans actually moving on these frozen Russian assets. He says there are basically only 2 weeks in order to make this decision. We've been reporting on how Belgium is sort of really preventing that because they need legal assurances from the EU. But in the failure to do that in the next 2 weeks, there's a lot of pessimism of what this looks like going forward and the means of financing Ukraine. So these are all going to be the conversations swirling around, and they're going to be hoping, I think, above all, to get a briefing from the Deputy Secretary of State in terms of where the peace negotiations last after those conversations in Moscow yesterday.
Yes, and efforts to involve the ECB in that frozen Russian assets plan, they have not come to much so far. Ollie, thank you very much. Bloomberg's Chief Europe Correspondent Oliver Crook joining us there from Brussels. Let's dig a little deeper into the European defence space. Oliver Doré joins us, the CEO of Hensoldt, for an exclusive conversation. Oliver, really nice to have you with us. Thank you for giving us your time. So we move tantalisingly closer, it seems, or there's more and more talk at least, of some sort of peace coming to Ukraine, but as yet, any deal remains elusive. If we do see a peace deal, what does that mean in the short term and the longer term for the defence project in Europe?
First of all, thanks for having me. So, yes, any kind of peace deal would, of course, which would be durable and just, would, of course, be welcomed for the people of Ukraine. I've recently visited the country and seeing the population suffering, so we all hope for peace. However, a ceasefire would not change the security situation in Europe, not globally. So I think any effect on what we are doing would be very, very low.
So do you think the US is talking about this in terms of a peace deal, but do you think the European take would be this is just a short-term ceasefire?
Well, peace deal or ceasefire, anyway, both things are strongly connected. But I think still it calls for action in Europe to actually ramp up, fill up stockpiles. And here I see still defense spending. I mean, the plans are there that the demand is structurally high, which has been confirmed in a couple of meetings I had with German politicians. So we expect that the next 10 to 15 years, defense spending will continue.
Your share price, high for the year, 113. We're now trading at 68. Do you think the stock is priced for peace now?
Well, I think that's definitely, the markets are driven by sentiment at the moment. Looking at year to date, I think we're still 90% up. Yes, we lost about 30% in the last 4 weeks. But still, I see it's not about fundamentals. I mean, our fundamentals are strong. Yeah. Growth is coming in. We approach probably a double-digit backlog, a billion backlog next year. So we have invested heavily into our capacity. It's significantly materializing at the moment. And above all, I think we have a very strong strategy. I mean, just recently at our Capital Markets Day, we have released our new multi-domain core. It's an AI-driven software stack, which definitely will disrupt the battlefield in the sense of connecting heterogeneous sensors together.
How easy is that to do? Like, how... We seem to be on the sort of the cusp of AI. I hear a lot about AI on the battlefield now.
Yeah.
But anybody that's kind of ever been in an armored personnel carrier or a tank or any of these other pieces of kit knows that these are big lumbering pieces of metal that struggle to connect with others. And I'm just kind of, how, we talk about the connected battlefield. How connected is the battlefield now? How good is Europe at this stuff?
Well, actually, at the moment, there's a lot of things to do. So we have just signed, as we saw in the media, a landmark contract, so almost $1 billion for the new reconnaissance vehicle, the Lux 2 in Germany. Yep. So that is really groundbreaking in the sense of the future battlefield. It's 360 degrees reconnaissance. It's real-time decision support. All of that has a lot of AI. But AI, coming back to your question, Guy, is in various dimensions. So we have AI at the sensor edge, actually with a mass of data to kind of sort it out, because also bandwidth is limited on the battlefield. So that's one element. Second is in the network to really connect the field, where we use also automated software development. And last is on the user interface, where we use large language models to have your small battlefield Siri that will actually give you the data based on native language.
You've talked at your Capital Markets Day recently, Oliver, about wanting to buy other parts of your value chain, and maybe you're talking about the supply chain here. Which are the areas that you think it would be helpful for you as a business to own? What difference would that make?
Well, it's about resilience at the moment. So our natural M&A target was always technology and internationalization. So as supply chain is at the core with our strategic element deliver at scale. So of course here we consider M&As as well. But it's not only, organically bringing those topics in. We are also working. Yesterday I attended a round table in Germany with Economy Minister Reiche and Defense Minister Pistorius, where they brought together automotive and defense industry, other sectors, where probably we're talking about build to print, also enlarging our supply chain to multiple sources. So that's quite a diverse set of measures we are taking at the moment.
Yes, yesterday we spoke to the ARC's robotics management, and they were saying that Germany needs to activate the industrial base across Germany rather than leaving cars to do cars and defence to do defence. Is that something we've talked to you about that before, about the hiring opportunities that you have within the auto sector? Is that something that is increasingly happening, these two sectors coming together?
Well, it's not only about personnel. Yes, indeed, we talked about it. Personnel is one element. The second element is really sourcing. So I mean, in many parts of our supply chain, we had sole source, just unique sources of supply. So here we're really diversifying the supply chain, where we take a lot of advantage of automotive. So looking at PCBs, we just outsourced many of our PCBs to suppliers which traditionally serve the automotive market. And last but not least, we also see some of the automotive suppliers getting bankrupt, getting into financial trouble. So we took over one plant from an automotive supplier to be faster, quicker in setting up our own production.
What's the latest on FCAS? You're a sensor supplier. We've got Airbus, Dassault, trying to figure out what they're going to do.
Yeah, I mean, everybody's looking. They announced end of December we will have a settlement between Macron and Merz.
And do you think that's going to happen?
Well, let's see. I still believe it's a great opportunity for Europe. It's a big chance. I mean, what we're facing globally to work together. But I mean, we as Hensoldt, we take it pragmatic. I still support FCAS. But anyway, we're looking at the building blocks in next generation sensors, electromagnetic warfare, and that is happening with Tranche 5 for the Eurofighter. It is happening with the UCAV that Germany is setting up. So we have multiple venues where actually we're trying to drive those building blocks.
Should FCAS go ahead? Do you if it didn't, what would happen? If it did, what would happen? Is it for the best that it does go ahead? Or is it for the best at this point that we decide that actually it is not a requirement? The French can go their own way, the Germans can go their own way. What do you think would be the best solution here?
Well, look, the situation is very heterogeneous. We have this trouble on the fighter, but on the other hand, I mean, we work with Thales, with Indra on the sensor pillar, where actually the industry, the engineers are really doing a great work. So in that regard, if we can capture this spirit in the broader context of the program, I think it would be the best to continue.
Oliver, can I ask you about the German government and how politics could get in the way of the defence spending plans or not, in your view? I mean, right now we're dealing with headlines around their pension reforms, and there are some talking about, well, if they can't get these through, maybe the coalition collapses. And I wonder what you think about Germany's commitment to defence spending with that in mind.
Indeed, Anna, there are inner political tensions, as I would call it. However, just also reflecting what I heard yesterday from Minister Pistorius and Minister Reiche, I see there is a very, very strong alignment on defense spending, on really building a credible deterrence and defense capability in Germany. So in that regards, I expect stability. I expect that those tensions will be overcome, because I think what is happening out there in the world, we need to have a strong government. We need to stand strong. The pressure from the right is there. So I think many reasons to come to a conclusion.
You started this conversation by saying that a peace deal would not change the EU security situation. Is there any kind of peace deal that would, or is that ship has sailed? It's too late.
Well, unfortunately, I don't see it. I see, I would say, a decade of iron, and in that regards, we are prepared to serve our customers.
Thanks, Oliver. Thank you very much for joining us, Oliver Dore, the CEO of Hensoldt.
Thanks.
Nice to see you. And we're going to carry on these kind of conversations throughout the week. Let's talk about another exclusive interview we're going to have. I think it's Friday. Rebounds CEO is going to be joining us 8:45 a.m. London time. Looking forward to that conversation. What have we got coming up on this show? We're going to take you from the defence to the civil side. Airbus lowering its aircraft delivery targets for the year after problems with its best-selling 320 range. It's just one of the stocks that we're going to be watching very carefully into the market open, which is now 15 minutes away. That's next. This is Bloomberg.
Welcome back. This is the opening trade, 7:48 here in Europe. This is the picture across European equity market futures. We do have some better performance coming through on the Spanish market. We'll increasingly feature that as we go through the morning. DAX futures up around 0.25%, but the overall picture for Europe then being lifted by Spain and the Inditex numbers. Joining us now for a look at these wider market themes is our Markets Live executive editor, Mark Cudmore. Mark, we've got a bit of a bounce in crypto going on this morning, that after a bit of a sell-off earlier on in the week. Are you more convinced by the bounce than you were by the sell-off, or vice versa? I mean, does this tell us anything about the overall picture for risk assets?
I'm not convinced that crypto is back into a bull market. Our colleague Connor Cooper on my team put out an extremely bullish macro view yesterday, saying we'll be back at fresh record highs soon. I signed off on its publication, even though I thought he's going to be completely wrong and ridiculous, because it was a well-argued view, and that's all I really care about. But ultimately, I think he's going to be wrong on this one. I think that this crypto bounce, we talked about yesterday about MicroStrategy's statement provided a little bit of relief to the market. That's fed through quite strongly, but we're not seeing the full kind of enthusiasm there. We're not seeing the volume, so I kind of think that this probably runs out of steam by the weekend. I still think that the digital asset treasury companies are going to weigh on the sector overall, even if strategy has got a bit of relief, and that crypto is still going to be a negative going into Christmas.
I read that piece a couple of times just to kind of get my head around it and figure out what was going on. But the basis of it seemed to be the Fed's going to cut rates and everything's going to be all right. Is the Fed going to? Is that everything seems to come down to the Fed cutting rates, and quite a lot. And I'm wondering whether that's the truth of the matter really here. Is that what everything seems to hang on? It seems that all asset classes seem to be kind of on tenterhooks, waiting to see what the Fed does.
Yeah, I think that there's two different dynamics here, and this is one of the reasons why I disagree with the conclusion. As I said, Bitcoin's 10% higher since Connor published the piece, so I'm clearly on the back foot here. But I think that the idea that we've got a Fed which is going to be too easy monetary policy relative to orthodox economics is a negative for the dollar. It's a negative for fiat currencies, and ultimately that's a positive for Bitcoin. My issue here is the time frames. I think that's a reason why crypto might have another boom cycle in it. I just think that the current bust is far from exhausted, and I actually think there's significantly more downside in the next couple of months ahead before we get into another boom cycle. So I think the time frames are mismatched there. Is everything based around the Fed? Yes, I think it's a large part of the positives here. The theme here, that the Fed is just one angle of the fact that we've got a US administration which is very, very focused on getting the market significantly stronger by the midterms next year.
Yeah.
And the Fed is a large part of that. They're juicing asset prices.
Okay, and Mark, how are you thinking about AI and its macro impact? Because we've had a lot of conversations around this desk about whether this is deflationary because jobs might go, or whether there's an inflationary dynamic because of all the capex that's taking place. How are you thinking about this?
I think because the capex, it's inflationary for financial assets. Again, that is something that's been facilitated by the easier monetary policy, and the rest of the policies pro that kind of capex, their ability to write off research from the administration. So it's inflationary from an asset price. What the impact will be on the real economy is still yet to be decided, and we're not sure we're going to get the full productivity boom through. Theoretically, it could be deflationary, but I don't think we can reach a strong conclusion on that just yet.
Great stuff, Mark. Thank you very much indeed, and that piece is well worth a read. MLIV on your Bloomberg. That is the fantastic function. Last 3 days, Monday, Tuesday, Wednesday, we started with this same piece of video when it comes to Chloe Mellet. Lovely Airbus A321. What's going on at Airbus? A restatement of numbers this morning, Chloe. What impact is it going to have?
Yeah, absolutely. Good morning, Guy. This is, as you say, the third day in a row that we're talking about Airbus, and the company has just cut its forecast for aircraft deliveries, and it blamed in particular those quality issues on some fuselage panels that it had already flagged. It kept the rest of its guidance, but obviously the scaling back of those targets is unlikely to be welcomed very strongly by the market. We have seen already a lot of weakness in that stock with that major dip on Monday, and so we are probably going to continue seeing that today. It's not been a good week so far. Let's see if that continues this morning as well. Moving on to Inditex, which is the Spanish retailer that owns Zara, and they reported very strong numbers for November, and so this seems to confirm the resilience of that company despite some weakening consumer sentiment that was flagged by other retailers in that sector. This could provide maybe some relief for the stock after, as we can see, it has been underperforming some of its key peers over the last few months, and this might reassure investors that had been worried that Inditex and Zara were losing a little steam, maybe. And finally, let's keep an eye on AI-related stocks this morning in Europe after Marvel over in the US provided some very upbeat commentary around AI demand. So we'll be keeping an eye on that read across for all of those names here that are exposed to this AI story. Analysts are saying that this, from Marvel, really reset sentiment into AI data centers. And so that's something that we'll be keeping an eye on as well this morning, given those fears around this AI bubble still being present.
Thank you very much, Chloe. Chloe Melly, our equities reporter, with some of the stocks in focus. There are a lot to choose from, actually, this morning, Guy. More than I had anticipated. Hugo Boss, that could be a mover. Guidance coming through from the clothing wear maker. Smiths, the detection machines that you walk through at airports, makers of such like, they could be in focus, an asset sale there. Also, Bloomsbury, a strategic collaboration with Google on AI-powered learning. So we'll watch that publishing business at the start of trade. Some interesting threads to pull on.
HSBC, going to be really interesting to see how the market reacts to the new chair. Feels like it's only going to be a temporary position, but nevertheless, we have an interim being appointed formally as the chair. Maybe not for that long. So it's going to be really interesting to see what happens. Keep an eye on the Swiss markets. Interest rates, potentially a story there. Keep an eye on Polish stocks as well. Maybe that's going to be an area of interest as well. Anyway, the opening trade is coming up now.
It is, and futures actually for France, just dipping into the negative. So I wonder what Airbus is going to do at the open. And the IBEX, the futures there, up by 0.6%, and that could be the Inditex story that Chloe was just talking about. So we'll keep an eye on those markets. We'll be back with the market open. This is Bloomberg.
Welcome to Wednesday. Bit of chop in the US session Tuesday. Tech did reasonably well. Europe went out near session lows. We rallied off that, not by much, but a little bit. That gives us a little bit of a tailwind coming into the European equity market session here in Europe this morning. Let's show you what the numbers here look like, just to give you an idea. Tech did actually quite well out in Asia, which is worth paying attention to as well. Euro Stoxx 50 futures up by 0.4%. FTSE's up by a tenth. DAX is up by a little bit more. The IBEX is up by a little bit more. But remember, just in terms of weightings, you just have to kind of think about the various markets and the weight that they have. And obviously, the bigger markets have a bigger weight, so they're going to have more of an impact. But certainly, I think it's going to be a single stock story this morning that has an impact, maybe at an index level. So it's a bottom-up market than a top-down market. So let's talk about some of the single stocks, Anna.
Yeah, absolutely. Let's do that. We've got Inditex certainly in focus. As you mentioned, the IBEX futures pointing higher, and this has to do with Inditex. And I can't find anything negative to say about these numbers based on what analysts are saying this morning. They're quickening the sales pace to justify their logistics investment. They're indicated higher, strong set of results according to some, margin beat according to others. These are the drivers for why this stock should go higher at the start of trade. So we'll watch all things Spanish. Airbus in focus. We'll watch this one in Paris as well. They see their full year deliveries at about 790 planes. They had seen 820, so this is all, of course, because of the issues with the panel, delaying perhaps some of the deliveries to customers. And HSBC also in focus, appointing Brendan Nelson as chair. This is a fairly unexpected appointment, and you might think, well, this is chair, not CEO, but this is a chairmanship that has typically had quite a lot of influence on the direction of this business. Guy.
and certainly trying to balance East versus West. That's been a huge portion of that job. OK, let's talk about the market open. Here we go. Wednesday session is about to start here in Europe. We're expecting a moderate index story, but an interesting single stock story. So it's a bottom-up market this morning. That's the way you want to be thinking about this. The FTSE 100 not doing very much. Wait and see what the IBEX does. That's going to be a big tell. What is the CAC going to do? What's the Airbus story going to deliver today? What's going to happen with the defence names as we watch what happens in NATO as well? That's going to be an interesting story here too. You've got a Glencore story. You've got lots of things that you want to be folding in to these markets. So the FTSE 100 going nowhere in a hurry. Stock 600 going nowhere in a hurry. But we don't have all the information yet. We need the CAC to open. We need the IBEX to open. There's the IBEX. There you go. Outperformance from the Spanish market. As Anna's already been pointing to, it is likely to be Inditex, a huge heavyweight on that market that is going to be doing the heavy lifting there. You can see the disproportionate effect that it is having, maybe that Inditex story on the IBEX. It's up by 0.7%, but the rest of Europe is absolutely flat. So there's a massive Spanish outperformance. I say massive. There is outperformance coming through from Spain this morning. It's up nearly 1%. The rest of Europe is doing absolutely nothing. The CAC is doing nothing as well, but I think the details below the surface there are going to be significant. And let's not forget the French politics is still very unresolved at this point in time. So, Anna, we await the DAX and we await the SMI, but what can we see on the screens in front of us for single stocks?
Yes, we can see really big outperformance by Inditex. The share price there up by 7.6%. I was seeing some of the suggestions it would be up by a couple of %. That didn't seem to fit with the futures picture, so clearly somebody had seen it going higher. So Inditex up by 7% this morning, and that means that the retail sector is by far and away the best performing sector in Europe this morning. So retail is up by 2.5%. The next best performing sector is technology, and that's only up by 0.9%. Is the Inditex story lifting the rest of the sector? It is a little. H&M would be the most likely candidate, and that stock is up by 1.8%. So these are quite heavily weighted businesses, and if you've got both of those going higher in retail, that is having a sizable impact. Airbus, we've talked about this one quite a lot. That stock is up by 1.5% this morning. It sold off hugely at the beginning of this week, didn't it? And then we got a drip feed of this new narrative around the panels and how that might delay deliveries. Well, now maybe at least we've got some facts around what Airbus thinks the impact is going to be on their deliveries.
They needed to get in front of this story. They need to play catch up in terms of the narrative that was coming out. We had a briefing last week about what is happening with these panels and what the impact was going to be. I suspect probably the financial team has taken maybe a little while just to kind of figure out what the impact is going to be. The operational team would have taken a little while to figure out what's going to be happening. We've now got an update on what it's going to mean in terms of deliveries, which they are slowing down into year-end to deal with this issue. But they are saying it is unlikely to change the financial outlook. However, yes, the stock is up this morning. On the week, Monday, Tuesday, Wednesday, it's still down by 5.7%. And we're not seeing a great deal of movement kind of versus where we were yesterday. So you're not getting a big bounce on this. Stock may be stabilising a little bit at current levels. Yes, we're getting the DAX is now open, and we have some divergent performance amongst some of the names that I've been watching this morning. So certainly Hugo Boss, not very heavily weighted, but it is down by 10% on their outlook. We're also watching the defence names actually moving higher this morning. So we had a conversation with Hensoldt earlier on. That stock up by 2.9%. Rheinmetall is up by 2%. So obviously closely watching that NATO foreign ministers meeting that's taking place in Brussels. But at the moment, those names going higher. Also the tech sector, it is the second best performing sector, and some of the players in there are responding very positively to what we heard from US peers, Marvel Technology and Microchip Technology. So that sector is doing pretty well this morning on the back of the read across the Atlantic. Let us bring into the conversation Jeffrey Yu, Senior Market Strategist at BNY, who joins us this morning on set. Jeff, very nice to speak to you. Morning. Good morning. So we've got quite this divergent performance across Europe, quite skewed around some earnings stories, quiet elsewhere perhaps. A lot of news items not quite in place just yet. We don't know who's going to lead the Fed. We're not sure where these Ukraine peace talks take us. So quite a lot of volatility perhaps could be ahead in December. Is that your take?
And if we want to talk about volatility, how about crypto, right? In terms of the trading desks around the world this week, I think that's one of the things people are looking at as well. But in terms of European stock indices, if you look at the services PMIs, which have just been confirmed today and over the last 24, 48 hours or so, it's still pretty robust. Right, so this is what the ECB is getting at right now. They're looking at the wage growth situation. They're looking at services demand, be that government-driven or private sector-driven, is kind of beside the point right now. There's still income out there, and people are spending it on services. Whereas in Germany and also the manufacturing side of things, that's going completely the opposite direction. So you think about divergence here for the countries, and Spain's the best example, more dependent, on services, value add. And it's happy days right now. And it feels like the ECB is actually leaning towards what they're seeing in terms of services and the input into inflation rather than the manufacturers. So how do they actually set policy for all of the continent? It's going to be interesting up here.
So a resilient story overall for the
Absolutely,
European economy. So what does that add up to in terms of investment strategy? We've seen the euro strengthening this year. Does that threaten to take the edge off that strength?
Less so, to be honest. And if you look at the ECB's own forecast, I've been surprised at how they're very, very confident that even if we have euro-dollar pushing well through 120, the upper bounds of their confidence bands has actually very limited impact on headline inflation numbers in terms of their inflation now. We're talking about 10, 20 basis points over the last few forecasts. So that then means that inflation, again, is driven by the services side. It's less elastic, less sensitive to exchange rates. So, again, less of an issue right now. I haven't heard any dovish comments for
Is there a
weeks
lesson
now.
to learn from the Swiss? Like Swiss inflation at 0 this morning.
Yeah.
Or is that just that extreme example?
So I think Swiss is an extreme example, and right now I don't feel the S&B will be too concerned either. Otherwise, I think their policy stance would have adjusted for now. And President Schlegel keeps on stressing that going to negative rates. The bar for that's very, very high. I don't think they want to move into that environment for the time being. There's a lot they can work with their balance sheet to sort of on an effective basis and lower borrowing costs. But overall, let's see what their conditional inflation forecasts are at the upcoming meeting, because last time around they sort of slightly nudged them up a bit. Again, underlying demand on the services side pretty strong in Switzerland.
Is the dollar going down next year?
So, again, it's against what we're still very comfortable with dollar moving lower against APAC currencies, for example. And this is where there's an acknowledgement of undervaluation amongst APAC currencies. And if you look at the role of these economies in the dollar's basket, it's very strong. Then you could argue on a trade-weighted basis that's going to keep dollar strength capped. But
just to jump in on that, is there therefore an argument for buying Asian assets next year? Based just on, you've seen it to a certain extent this year, like broad Asian assets on the back of.
And I'd be much more comfortable with APAC equities, with EM equities in general, actually compared to EMFX, because you're seeing a general trend for central banks just to maintain some sense of currency stability, not drive it strong or anything like that. I think, for example, PBOC would be happy with the need to gradually strengthen, but just maintain expectations there. But allocation-wise, I look at our data. This is an amazing statistic. Our clients' US equity exposures are 80 times, 80, Chinese exposures right now. So we can quibble at purchasing power in terms of relative market composition and access. 80 times difference, that seems a bit of a stretch. And if you look at the differentials between DM and EM, it's a bit lopsided as well. So you can actually it's not even EM performance at the expense of DM performance. Both can actually move relatively well.
Okay, and let me go back to the DM side of things then, with Europe in focus. If we do see peace in Ukraine, however that is defined, however that is hashed out, that would clearly be a wonderful thing. Would there be a peace dividend for Europe in terms of European stocks? On the downside, you might see weight applied to some of the defence names, but we spoke to Hensoldt earlier, who said, look, the build-out of European defence continues regardless. Would that be the medium-term view, do you think?
I think the medium-term view, maintaining that build-out industrial demand, that has to continue. I think there is will there in Europe. Let's see how current events influence that. But going back to defence holdings right now, feels like our clients are pricing in a so-called peace dividend. Well, actually, I would say it's the other way around, the lack of a dividend for defence stocks. So at its peak in the summer, we're about 60% above last year's average. Now we're down to about 35%. So that positioning has actually come off quite a bit.
We get cheaper energy in Europe as a result.
So that's the point. So a lot of clients are asking, and in terms of trading, asking, should we be buying euros on the back of what's going on right now? And actually say, if it's cheaper energy and you're less worried about the supply issues, isn't that disinflationary?
Yeah.
So the ECB, which has been talking about supply issues driving their inflation outlook, that actually comes off. So you could make a case for the ECB being less hawkish. So I actually fade any euro strength, based on the current developments.
So energy is telling you to fade. Okay. So how big a factor? Because energy prices have come down already quite sharply.
Yeah, but it's the supply premium that's actually driving up inflation expectations. I would expect the ECB's inflation surveys for households, which are quite high right now, talking 4 to 5%, on a forward-looking basis. That starts to come down. Then the ECB no longer has the argument, we need to anchor inflation expectations. So I'd argue for a less hawkish ECB.
How are you thinking about technology stocks right now, Jeff? We've got chip names doing quite well in Europe just this morning, but I was quoting a Wells Fargo note earlier on, which talked about how some of the names that have been typically associated with OpenAI and GPUs are doing, ChatGPT and GPUs, same thing, are doing less well, but things associated with Gemini and TPUs are doing better, as if we're seeing some sort of rotation within the tech space.
I think people are looking at competition coming through, and it's not just within the US. You look at models elsewhere within Europe, within Asia. China's launching quite a few right now. The cost effectiveness. So I think there's been a lot of talk about how to make AI training more cost effective, right? So I think now that's what the market is looking at right now. I still feel this is a rising tide that lifts all boats in terms of total market capitalization and value add. That's essential. But again, going back to our data, our clients are not really taking their positions away from AI or semis right now. That's quite resilient if I look at over the last few weeks. But our clients' exposure in US consumer-related stocks, discretionary staples like food production, for example, that really is coming off.
It's coming off.
It's coming off. So that's where I look at more of the K-shaped economy issue. That's what our clients are pricing in.
Yeah, well, tell us more about that then, because we're going to get another take on the US consumer at the end of this week, I think. I mean, Michigan sentiment, a whole lot of data coming from the States. So the K-shaped thing is real, and people are investing around it.
That's what our clients are positioning, and you can think about it in two ways. It's if earnings growth in real terms that starts to come off and it's being eaten away by inflation, or from a corporate investment point of view, from equity performance point of view, if companies are worried about US consumers starting to unwind a bit, then they have to absorb some
upper end consumers
through them. No. It's on the food production side, consumer staples.
Consumer staples seems like an odd thing to be doing in that sense, as much as
that suggests more stress.
You would have thought that margins, So it might be just potential margin stress coming through. Again, that's not totally in sync with the macro data that we're seeing right now, but it feels like where clients, where they have limited resources or they want to deploy their allocations, certainly much more skewed towards the investment side, the CapEx side, rather than the consumer side.
Nice to see you, Jeff. Great to see you stopping by. Jeffrey Yu joining us, Senior Market Strategist, joining us from BNY. Core 6 looks a little bit like this morning. You have in the middle, defence stocks doing quite well, chip stocks doing quite well. You've got food companies to the right-hand side actually kind of holding their ground this morning. Pharma's a little off. Luxury's a little off as well. LVMH is down a touch this morning. Maybe that's a little bit of a drag on the CAC 40. But staying in the kind of clothing space, let's turn our attention to what is happening with Inditex. That stock certainly having a very solid morning. Chloe Melly has more.
Good morning, Guy. Yeah, Inditex is doing very, very well this morning. We're up more than 7% after it reported very strong earnings. It said that sales had accelerated very strongly in November, and so this confirmed the kind of resilience for that Spanish retailer that owns Zara, despite weakening consumer sentiment that other peers within that retailing sector had already flagged. And so this reassured investors that had been a little bit worried about some lackluster performance from Inditex lately. Moving on to Stellantis, which is up this morning as well, quite strongly, also more than 7%, and that is on the back of two things. So first of all, an upgrade from UBS analysts, and then second of all, a plan by the Trump administration to undo some fuel efficiency standards that were put in place under the Biden administration, and that was with the argument of that this is standards that drive up the cost of cars, and so we are seeing Stellantis benefiting from those two things this morning. Moving on to AI-related stocks, and they are up. We are seeing green across the board this morning. That is some read across from the very upbeat, bullish commentary on AI demand that we had from Marvel over in the US, and that is reassuring investors that maybe this AI bubble is not about to pop just yet, and therefore we are seeing some positive movements, especially for ASM this morning. That is up 3.8%. And finally, Smiths, the engineering group listed in the UK, is up this morning about 2.5% after agreeing to sell its Smiths detection unit to CVC for an enterprise value of £2 billion. This is a unit that makes airport scanners, those airport scanners where you don't have to take out your liquids. And so this sale is being received very well by the market as part of a broader strategy revamp for that group as it refocuses on its industrial operations instead.
Chloe, thank you. Chloe Melly with a look at some of those stocks on the move, ending with that asset sale at Smiths Group coming up on the programme. Good-looking sales figures from Zara owner Inditex. We'll bring you all the details behind those numbers. Luxury stocks selling off, though. A broker update, perhaps, an analyst update, perhaps, the cause of that. More on this sector next. This is Bloomberg.
Welcome back. You're watching the opening trade. We're 80 minutes into a session which is being driven, I would argue, by a lot of single stocks out there. There's actually some really interesting corporate news that is worth focusing on. You've got Airbus on the move. You've got Sainsbury's on the move. You've got Inditex on the move. Let's talk about Inditex because it's certainly having a meaningful impact on the Spanish market. I've seen the word reassuring being used a lot this morning in some of the stories that we're writing about this stock. I'm not sure it goes quite far enough, reassuring. These are really good numbers, as Anna was pointing out a little bit earlier on. November sales accelerating, resilience in the weakening consumer sentiment story that others are not exhibiting. You look at what is happening maybe over the road at other retailers at the moment, and they're not seeing this. So why is Zara able to deliver? Why is Inditex able to deliver? Well, let's try and answer that question. Bloomberg opinion columnist Andrea Felsted joins us around the table. These are good.
They are, and it's really incredible given that we had quite unhelpful weather in various parts of the world through the autumn. Plus, particularly in the US, there is a sense that the consumer, particularly the lower to middle income consumer, has slowed. So Inditex has really bucked that trend, and the reason they have done that is we know they're very reactive to fashion cycles. They can, get the right products for the right trends, the right weather at the right time. But also they have been moving up market as we've talked about. And I think that has given them, a whole new customer base. They're filling that white space left by the luxury brands. It's acceptable to go high-low, maybe buy a high-end handbag, other pieces from Zara. That is the way we dress now, and that is helpful.
So high-low is working for them, then,
Definitely.
Andrea, rather than... Because when I saw those headlines around them trying to move into a higher price bracket, I wondered whether the Inditex consumer would take that. But you say it's attracting other consumers.
Yes, because, luxury brands have priced out a whole, section of their customer base, and they are looking to other parts of the market. It's why Ralph Lauren's doing well. Names like Cezanne and Zara, and Massimo Dutti is capturing that.
What is 2026 going to look like for the retail space? What trends am I watching? What impact is the kind of the macro consumer picture going to have? Who's well positioned going into 2026?
Well, I think Zara is well positioned. I think the luxury names are going to be very interesting. We're a year into all the designer changes. We had a lot of designer changes last year. That's all going to be, all those new products are going to be hitting stores early next year, first quarter of next year. We're going to see how the consumer reacts. There's a lot of hope that China is starting to pick up again. There's a question mark over the US. The US consumer, the top-end US consumer has been very strong, but we are up against some tough comparables after the election. Plus, we've had those wobbles with Bitcoin, a bit of wobble over the stock market. The other thing I was hearing yesterday is there's a bit of hope for all the US consumers. They might get a bit of boost from the tax bill, a bit of tax money.
Well, we love to draw links between the Bitcoin story and luxury spending. That's great fun. But I want to ask you about luxury, actually, Angela, because it is the worst performing sector, it seems, this morning, or certainly consumer products and services is worst, and within that, the worst performer is caring. And there's been a downgrade from one analyst. But this is a stock, you were saying in the break, that's come a long way this year.
Exactly. Had the new CEO, Luca de Meo, started in September, and he's really hit the ground running. He's renegotiated the Valentino deal. He's delayed that. He's sold the beauty business. He's done various executive reshuffles. He's done the easy stuff. The share price has reacted. I think investors are asking, how much further can this go? Because he's got the really difficult thing to do, turning around Gucci. We had Demna's little sneak peek of Demna's vision. We get the full one next year. We don't know if that's going to be enough, whether it's going to resonate with consumers. I think that uncertainty is going to last until we get a feel for Gucci either way.
OK, Andrea, thank you very much. Bloomberg opinion columnist Andrea Felsted with the latest on the luxury names and high street retail. Let's move on from that to the banking sector, where we have some news flow to cover. HSBC down 1% in the UK listing, but this is a sort of a longer term story, perhaps. HSBC has appointed Brendan Nelson as its new chair, or its next chair, replacing financier Mark Tucker, who has led Europe's largest lender for much of the last decade. He takes the reins as CEO. George El Hedary pushes through a massive overhaul of HSBC that's seen the bank reorganise into 4 4 new divisions. Let's get some perspective on what this means. Our managing editor for EMEA Finance, Tom Metcalf, joins us on set right now. So what does this mean? Good morning, Tom. What does this mean that they've chosen this person to lead the business from the chairmanship perspective?
Yeah, I think it's very much a safe pair of hands. It's kind of a reversion to what they traditionally did prior to Mark Tucker, which is look internally. You know, and yeah, I think safe pair of hands is a great way of explaining it. They went out, they looked at external candidates. There's a few things here. A, just a sense that none of those external candidates had, you know, perhaps everything they were looking for. And B, you know, for such a big behemoth as HSBC, it probably makes a lot of sense to look internally, somebody who can immediately jump on, and perhaps it reflects that dynamic of, you know, you've got Georges Elhedery as this very high-profile, dynamic CEO, and perhaps now the sort of dynamic they're looking for between the chairman and CEO is a chairman who, you know, perhaps takes a bit more of a low-profile back seat compared to a Mark Tucker, who was famously hands-on.
Is he an interim permanent chairman?
I like that. Well, exactly. He's the interim chairman, he's become the permanent chairman, but yeah, the big question is how long for, right? He's 75, 76. And I think yesterday, actually, Elhedery said something along those lines that, you know, he certainly wouldn't be looking, Brendan Nelson this is, to sort of be in the seat for as long as a Mark Tucker, who was there for 8, 9 years.
So the search continues?
I think
is this a sign that they haven't found the right person, basically? They had this search, they couldn't find the right person, they got an interim, they need somebody in the chair, let's make him permanent, but we'll carry on looking. Is that how I should read this?
Yeah, I certainly think kind of in the medium term, you know, so, you know, probably give a year, maybe 2 for sort of Elhedery to make his mark. They'll see where, you know, geopolitics are going, they'll see where the bank is going, and then, yes, naturally you would think that's a great time for the board, perhaps with a little bit more time than they had in this process, to really do an extensive search, perhaps without that pressure of who's it going to be, Mark Tucker's left the building, where is the permanent replacement?
We'll watch this space. We'll continue to watch this space. It's not over yet. Tom Metcalf, Bloomberg Managing Editor for EMEA Finance. Thank you very much indeed. Let's turn to another stock that we are watching this morning, Airbus. The European playmaker cutting its 2025 delivery target after discovering production glitches with its best-selling 320 family of jets. What they've done this morning is come out and basically updated the market on what, A, the delivery numbers are going to be, which have been cut. They're always going to be a bit of a stretch, but they've now been cut, and reiterated financial guidance, which I think is what the market is latching onto a little bit this morning, and as a result of which what we've got is the stock rising on the back of that. So we've got new delivery targets. Now remember, Airbus gets paid when it delivers airplanes, so delivering airplanes is kind of quite important, and making the year-end targets kind of quite important. But they need to fix this issue, and they need to get on top of this issue, so they're kind of maybe just downgrading expectations into year-end.
Yes, and do we think maybe the market thought it could have been worse, either on the financial guidance or the numbers of aircraft delivery? Yeah.
I think just knowing. I think the problem was we had this air pocket where we found out about this briefing last week. That got broken early on in the week. Airbus has then effectively been in a period where it has had to sort of get its numbers back together again and then come out and rebrief the market on what is therefore going to happen. So we've had this kind of interim period where, as you say, the market's gone, don't know what's going to happen here, mark the stock down an awful lot, and now we have something to work off. So at least now the market has some stability in terms of its expectations.
We know the two important things: how many of these are still not in delivery to clients, and how many of these will be delayed in their delivery.
But I think there was but I think there is a lesson in this in as much as communication. This briefing happened, and it doesn't appear as if Airbus was ready to brief on the back of it. It briefed its customers, but wasn't ready to brief the market. And I think there was a gap there. Anyway, don't underestimate the changes at hand in 2026. That's the message from CaixaBank's chief economist, Enric Fernandez. He is going to be joining us shortly. That conversation coming up. This is Bloomberg.
Welcome back. This is the opening trade, 30 minutes into Wednesday's session. Let's have a look at where we are across these European equity markets. The DAX is up 0.3%. The Stocks Europe is up by 0.2%. We've actually got some outperformance, yes, in the DAX, but also in the Spanish market. The IBEX doing pretty well this morning. The Inditex numbers delivering pretty strongly for the Spanish market, so that's an area of focus. Airbus had been a weight on the CAC 40 in earlier sessions, but not so this morning, and so that one is pretty flat. The FTSE 100 lags a little bit this morning. That's the broad picture across across these markets. There are some big picture themes to focus on, Guy, but there are also some individual stock stories.
Absolutely. Let's peel the onion and figure out what is happening just below the surface of the index story. This is the stock 600. Look at this, really finely balanced. 296 stocks up, 281 down. This is a market that is pulling in two different directions, but the two sides are cancelling themselves out. Volume's a little light, but not very light. It's been lighter earlier on this week, so volume's coming back a little bit relative to the recent story, though obviously it's an average, so it's a moving target. Look at this, Inditex. Anna was mentioning it. Look at what is happening with Inditex. That stock is way outperforming expectations this morning and is up by 6.46%, 6.5%. That is driving the IBEX this morning very nicely. ASML is also having a big impact. The chip story, front and centre. We saw it out of the US session yesterday, fed into the Asian session. Now it's feeding into the European session. So the chip sector is up. Roche has also been climbing over the last few days and continues to do so this morning. So the pharma space back in the front foot as well. It's up by 1.3%. Let's talk about the other side of the coin. HSBC down by 0.8%. We have a new chair at HSBC. It's the interim chair. Feels like a kind of permanent interim chair. I think probably HSBC is going to take a little while longer to figure out who its next chair on the longer term basis is going to be. LVMH is giving back a little bit of ground this morning. So while we've got Inditex up, we've got the upper end luxury story down a bit, and Allianz, the insurance sector, down by 0.9% as well. But it's fascinating to see what is happening at the upper end of the market this morning. Chips. The retail story really driving the picture forward for Europe this morning. A little bit of tailwind coming through from the US yesterday. That's beginning to fade, but it's a balanced picture, Anna, in Europe this morning.
Yes, let's have a look at some of the other news flow we need to keep across this morning then, Guy. President Trump says he plans to announce his selection to lead the Federal Reserve early next year. Trump made the comments during a cabinet meeting where he later teased National Economic Council Director Kevin Hassett as his possible choice. Amazon's cloud unit has raced to get the latest version of its AI chip to market, renewing efforts to sell hardware capable of rivaling products from Nvidia and Google. The move comes as another AI giant, OpenAI, is reportedly redirecting internal resources to speed up improvements in ChatGPT, declaring a, quote, code red situation that will delay work on other initiatives. And the Kremlin says Vladimir Putin held, quote, very useful talks with the United States envoys Steve Witkoff and Jared Kushner, though the sides failed to reach agreement on a plan to end Russia's war in Ukraine. Those talks came just before the NATO foreign ministers meeting, which is set to discuss the alliance's support for Ukraine, which is underway right now, Guy, in Brussels.
Absolutely. And what impact is that going to have on the outlook for Europe next year? Peace in Europe, peace in Ukraine could have a meaningful impact in terms of the economic outlook. Enric Fernandez, Chief Economist at CaixaBank, joining us around the table to discuss what 2026 could look like. Good morning.
Good morning, Guy. Thanks for having me.
Nice to see you. So we get a peace deal. How does that change the outlook for Europe next year?
The way we think about it is that it can be both a positive supply and demand shock. Supply shock in positive terms because of downward pressures on energy prices. We have already seen that on natural gas prices coming down along the curve, so even for future prices. And then positive demand shock, not only for the impact that it has on the macro from lower energy prices, but for all the reconstruction efforts that have to be put in place in Ukraine. But we have to see the details of that agreement to see to what extent trade restrictions are lifted and to what extent the reconstruction effort moves ahead, at what pace. And we'll see, because if part of the territory that needs to be rebuilt stays in the hands of Russia, there's less room for...
Is the impact greatest the closer I get to Ukraine? i.e. is Central and Eastern Europe going to feel the biggest impact and it just fades kind of progressively the further away you get from the front line?
Yeah, I think so. That's the case. I mean, for the euro area as a whole, I think this is positive in terms of growth. It lowers a little bit inflation. It strengthens the euro. It may put some pressure up on long-term interest rates. But I think we're talking about marginal effects.
But if you're Poland, if those kinds of countries that are right there, like how big an effect could we be seeing?
Definitely bigger than countries that are farther away from Ukraine. But overall, I think it's a small effect. Yes, true, higher the closer you are to Ukraine.
Okay.
Germany especially as well.
Yes. Let me ask you about your outlook then, Enric, for 2026. And one of the big things we keep talking about, of course, is AI. And you draw our attention to the role that AI could play. And one of the big questions that you have around AI is the extent of capital investment it's going to create, how it's going to drive up productivity, and whether that will be enough to offset all the negatives we're dealing with around demographics and economic fragmentation. So what's your answer to that really important question?
I think that the answer depends on whether we're talking about the short term or the longer term. Over the short term, we are seeing a clear impact on activity, especially in the US. AI investments are sustaining economic activity over there, and that's what explains, I think, to a large extent that the US is going to grow by about 2% this year. Over the longer term, I think that there's much more uncertainty on what's going to be the impact in terms of productivity growth and what's going to be the timing of that impact. I think that there's this law which may hold up true this time again, which is we tend to overestimate the impact over the short term and underestimate the impact over the longer term.
Yes. And I mean, this could have an impact in the longer term in lots of ways. One area that you flagged to us before our conversation that I've also been reading about elsewhere is what does this do to the tax base for Western countries? What does this do to the fiscal landscape? I mean, are we going to be talking more about taxing capital and less about taxing income? Is that going to be the effect of AI?
Well, it depends on what's going to be the impact on employment, and we don't know that. And actually, you have two different Nobel Prizes saying completely different things. Some saying this is going to have a large impact, may have a large impact on employment over the next 10 years, and others saying it's going to have a negligible impact because some new occupations will come, because the productivity gains will increase incomes, and that will also help create employment and offset those occupations that may disappear as a result of AI. So we'll see.
Are we going to get more nervous about government debt in 2026? Should we be getting more nervous about government debt in 2026?
I think that it depends on the country you're talking about.
Sure, but in aggregate?
Yes, in aggregate, yes, because I think you have several hot spots, the US, the UK, France, where that's an issue that needs to be fixed. And either you see progress on that front or some people may gonna get nervous. I think that by itself, I don't see a fiscal crisis exploding. But the question is, if there's another shock, then people will start focusing more on that.
Okay, so let's talk about another shock. So you get a financial shock. Is there the capacity, given where debt levels are, to do more QE, to do more fiscal financing? What are the shock absorbers looking like right now from a government perspective? If we do, I don't know what the next shock could be, but there's going to be one at some point. And I'm wondering what our ability to manage that shock is going to be as the situation evolves and we get more and more debt being piled on.
Yeah, definitely. And we are all crossing our fingers that shock takes a while to show up, because we need to rebuild some of the fiscal space, for instance, to be able to react to a situation like that. Although I think that if things really turn sour, there would be room to respond. Not as much as we had during COVID, but there would be some room. And on the monetary policy front, I think that there's always more room, especially if the shock is a deflationary shock. And you were talking about the financial shock, and that would be a deflationary shock.
Okay, so more room on the monetary policy side. On the fiscal side, Enric, I mean, where would the area of concern be? We talked a lot about France on this programme and vulnerability there. People don't talk about Germany as being vulnerable on a fiscal level, but the government seems to be suddenly a little less stable than it was, and people worried about that coalition. And a lot of the heavy lifting is being done by Germany right now on the fiscal agenda for Europe.
Yeah, and I think that's good news overall. I think that Germany can afford to have a fiscal deficit of 4%, which is probably what we're going to see next year. And I think it's very important that that fiscal stimulus goes forward. Actually, there were some doubt in Germany whether they should go as far as that 4%. And I think it's good for them to do that. They have the room to do it. And I think that can help sustain economic growth in the euro area.
So in terms of, what do you think are going to be the big levers next year? As you look at the landscape over the next year, what are your models kind of hinge around next year?
Yeah, let's focus, for instance, on in the US and the euro area. I think for the US, there's a continuation of this AI investment boom that we are seeing, and that's going to continue contributing to sustain the economy.
Does Trump need to keep the economy going into the midterms? Is that what next year is going to be about in the United States?
Yes, that too, and also lower rates from the Fed. I think we're going to see the Fed delivering on those rates. Yes, we'll see whether that happens in December or January. I think that the odds that the market is putting right now on the December cut, which are close to 100%, seem high to me. I think it's going to be a closer call. But I think that the direction is clear. We are moving to rates around 3% next year in the US, and that's good for the US. In Europe, I think that we're going to sustain favorable economic conditions with stable interest rates, and that's good for the economy. Those level of interest rates are good for the economy, and we're going to see a stronger Germany, and that's good, growing at more than 1% next year compared to almost zero this year. And also labor markets. And Spain, very well. It's doing very well. I think that this year it's going to grow about 3%. I think we can sustain a positive growth differential vis-a-vis the euro area. Next year, there's going to be growth closer to 2%, but there are strong forces there sustaining that overperformance.
Rick, thank you very much. Thanks for joining us, Enric Fernandez, Chief Economist over at CaixaBank. Coming up on the programme, we'll talk to Fatih Birol, who's the Executive Director of the International Energy Agency, as the EU reaches a deal to phase out the use of Russian gas. That's next. This is Bloomberg. Welcome back. This is the opening trade. We are 45 minutes into our session this Wednesday, the 3rd of December. European equity markets on the front foot. We have the DAX substantially higher, the IBEX actually really substantially higher this morning, and also the AEX. So we have some chip news sending us higher. We have some retail news sending us higher. Those are the areas of focus in this morning's markets. Let's quickly check what's going on with gas prices. This is the Dutch benchmark contract, and you can see that it is down by just shy of 1%. We're near 20-month lows on this gas price. The move in European natural gas futures comes as the European Union has struck a deal to phase out Russian gas faster than originally planned, aiming to sever ties with its once primary energy supplier. Let's get the view now of Fatih Birol, the Executive Director of the International Energy Agency, who joins us right now. Fatih Birol, very good to have you with us. Thank you for being with us on this programme. I wonder how material this news is from Europe. I mean, we've seen progress already to date in excluding Russian energy from European markets, but this goes even further. How material, how substantial is this news from Europe?
I think this is a historic day for Europe and for global energy markets. Russia has been the #1 energy supplier of Europe over half a decade. I should say, in fact, half a century, since 50 years. And natural gas was the pivotal fuel of Russia sending energy to Europe, to Germany, to France, the entire Europe. And until recently, about half of the European gas demand was met by Russian gas. And now, today, European countries have decided to stop buying Russian gas as of 2027. As such, it is a historic day for Europe, for Europe's energy independence.
So a historic day. Another historic day would be if we saw, Fatih, end of war in Ukraine. We're not there yet. But if we do see that, what happens to Russian energy? Is it shut out of Europe forever, or is this still under review? I appreciate this is a political judgment as well.
Yeah, it's a political judgment, but when I look at it from the energy security point of view, my golden rule #1 for energy security is diversification. The concentration that Europe has exercised with Russia on energy imports was very dangerous. And today, in this geopolitical context the world is in, European countries going back to Russian energy, in my view, would be a mistake. And in my view, Russia being the major energy supplier in Europe, that saga is gone, that chapter is closed, the parenthesis that has been opened 50 years ago is closed today, and in my view, forever.
Yeah. Forever.
In my view, forever, yes.
At it,
as long as, yeah.
There is an argument that says that it's very easy for Russia to still export a lot of energy, hydrocarbons, into Europe, that is the path of least resistance. And as a result of which, Europe, which is starved of cheap energy at the moment, may find that decision hard to ignore. How certain are you that this is forever?
I am not certain at all, but it is my advice to one shouldn't repeat the mistake the European countries that they have done in the last few decades. And when we look at the markets today, gas markets is much different than it was 50 years ago, because as IEA has predicted, as of 2026, there will be a huge amount of LNG, liquefied natural gas, coming to markets from US, from Canada, from Qatar, from Australia. The markets will turn, the gas markets will turn from the markets of sellers to the markets of buyers. There will be a lot of gas in the market, and in that context, when there is a lot of flexible gas in the markets, Europe going back to Russia, in my view, leave the political side, just from the energy security side, it is not a good decision in my view.
What does that mean in terms, though, of Europe's efforts to decarbonise? There's been a lot made of the fact that, at the moment, energy in Europe is expensive, and one of the reasons why it's expensive is that there's been a huge effort to decarbonise. Do you think gas will make that harder? A cheaper gas will make it harder for Europe to continue that push?
So when I look at the Europe's in the short and the medium term energy future, I see that, first of all, the renewable energies are growing very fast. Between the Russia's invasion of Ukraine, when we have the major energy crisis to today, in 3 years of time, renewable energies increased by 40%. Huge increase. We have never seen such a big increase, mainly solar, but also wind, others. Then some countries thought to phase out nuclear power, such as Belgium, where I am now. They changed their view. And they, not only the Belgium, but Sweden, Poland, France, they pushed the nuclear power. And we will use also natural gas in Europe, but this time it will come mainly from LNG and from Norway. And the fact that I mentioned, a lot of gas coming to markets will put downward pressure on the prices. Europe will still be not as having a cheap gas as maybe United States, but or other parts of the world, but the gap will narrow down as a result of lower natural gas prices.
Do we need to worry about Europe replacing a reliance on Russia with a reliance on the United States, Qatar, other Middle Eastern suppliers of energy, Fatih, or because of the dynamics you describe, the energy coming from Norway and renewable sources, is that not a problem?
I think regardless of the country, just having an over-reliance on one single country in energy is always a risky business. And the energy world, this over-reliance can turn into major vulnerabilities overnight. So it is my humble advice is diversify as much as possible. from which countries you get the energy. Of course, having good relationships with the partners who are reliable is important, but diversification is the name of the game, in my view, both in terms of getting the imports from which countries, but also in terms of technologies, in terms of gas, in terms of renewables, in terms of nuclear power. And we shouldn't also forget that the reliance on critical minerals on one single country is a challenge itself as well.
Great to catch up. Thanks for the input. Always appreciate your thoughts. Fadi Birol, Executive Director at the International Energy Agency, joining us as we see Europe blocking Russian imports. Let's talk about what else is coming out for the rest of the day. NATO foreign ministers are meeting in Brussels. We've brought you what we've been getting from there so far this morning. Euro area composite PMI data coming through a little bit later on. Macron in China, we're looking forward to that as well. ADP employment data out of the United States. I think we've got some services ISM data also to think about as well. What are we going to be watching for the rest of the session? What's on Valerie Teitel's mind? She has returned.
I have returned, and the data today is for the month of November, so it's no longer a backlog. This is up-to-date information from ADP on the labor market, and ISM services, as you mentioned, comes after a weak manufacturing print on Monday. Now, we do have to wait to the third week of December to really finish up this backlog for this November data, but the ADP today, I think, could be of key interest, not only to markets, but for the Fed, who meets next week to decide on interest rates. The market is pricing in a 90% chance that they do go ahead and cut, but it is a fractious Fed with many dissents seeming to be on the cards if they go ahead and make that cut. Perhaps today's data could shift some of their minds if we see some more weakness in the labor market.
What's the Treasuries conversation that we have not dedicated enough time to talking about, Valerie?
Well, look, it was very interesting, the price action that happened earlier this week. We had that sell-off in JGBs, and it really impacted global bond markets. And I think that's getting a lot of people wondering about what 2026 has in store. We actually had a note out from BlackRock talking about their 2026 view. They are underweight the long end. They see a risk that term premium could come back in the long end, and that is not based on Japan. It's based on this AI capex spending boom. So again, this AI trade is becoming more and more related to not only the credit markets, but also the treasury markets.
At the long end, though, that's interesting.
Yeah, supply and demand, right? The more corporates issuing bonds, the more governments issuing bonds. Supply and demand really does weigh more on long end, where term premium is more the name of the game versus Fed policy at the front end. So again, this is a big debate right now, whether we should be worried about this spending, whether it's going to add pressure, or perhaps we should be more worried about inflation and that remaining sticky. Those are the two kind of arguments that are out there in the Treasury market today.
Valerie, thank you very much. Valerie Teitel, not enough Valerie Teitel on the show today. We'll rectify that tomorrow.
It's been away. Thanksgiving has been happening.
No, I just meant the last 2 hours.
Yeah.
Oh, yeah, we'll give her Thanksgiving.
Agree.
She's allowed Thanksgiving holiday. Right, Kevin Hassett is the latest guest on the David Rubenstein Show. You can catch that tonight, 6 p.m. London time. Really interesting to get his insights then as to where he sees Fed policy. We'll see what David Rubenstein decides to ask him about. That is it for the opening trade. The Pulse is up next. European equity markets, a slightly more positive picture than maybe we've been anticipating. Earnings stories lifting sentiment a little bit.
Inditex is the story. It's the standout story of the morning, isn't it? Lifting the Spanish market, having a really big impact there. So that's been a fascinating story to watch, blowing past expectations. What does that tell us maybe about the global consumer? Anyway, we'll carry on the conversation. The Pulse is up next. Hope you enjoy the show. This is Bloomberg.